Hello and welcome. My name is Jason Van Sickle and I'm president of J. Van Sickle and Company, and this is the tutorial for historic preservation tax credits. So let's just jump right in. Who benefits from historic preservation tax credits? Well, basically the historic tax credit program is a federal program where the federal government provides federal tax credits to individuals or businesses that have a historic property. And so basically what happens is that the federal government will provide these historic tax credits as an incentive for property owners to go in and renovate their properties, but doing so in a way that maintains the historic integrity of the property. And in return for doing that, the government says, well, what we'll do is we'll look at how much you spent, we'll figure out which of those items qualifies, meaning which we liked that you did that kept the historical integrity, and then we'll take 25% of that number and we'll give you tax credits equal to that amount. And we'll get into, well, actually let's get into right now what it means to have certain qualified items. Qualified items are basically those items which the federal government deems as being key to the preservation of the property. So it really covers a lot of things. Quite frankly, in my experience, about 80% of all your construction costs or hard costs will be covered, and almost all of your soft costs will be covered for a project. But it really is important that you understand what will and won't qualify for historic tax credit reimbursement, and so you really need to get with an expert or a consultant who can walk you through the details of the program so that you know what to expect. So, but really the main thing is that to be able to even qualify for this program, your property has to be historic. And the way the federal government says we've now designated your property as being historic is by placing it on the National Register of Historic Places. So in order to qualify for the National Historic Preservation Tax Credits, and to qualify for that program, you need to be placed on the National Register of Historic Places or already have a property that's on that register. Once that's done, if you have a project where you say, okay, now I'm going to do a bunch of renovations, then what you need to do is put together a proposal that basically outlines what you're planning on doing. That's something that you're going to need to have, and again, I would recommend getting a consultant to help you do this. This is not the type of thing you want to learn by trial and error, because errors can cost you your credits. But what you're going to want to do is put together a proposal. These are the things we're going to do. Submit them. They'll either say we're okay with it or no, we want you to change those things. It can become a back and forth process. Again, a very helpful place to have a consultant there to help you navigate that process. And then you get to a point where you say, okay, you're approved. If you do these things that you say you're going to do, then we will award you this amount of credits. So go ahead. And so you proceed with the improvements that you planned on making to the property, and you get to the point where those improvements are done, and you file your final paperwork to get your tax credits. And that happens right when you're done with all your construction. It's really on you when you file. You do the final filing of the paperwork when you're done with your improvements or your construction process. And again, the key to understanding this program, it's a government program, so there's bureaucracy, there's a lot of paperwork. You need to make sure that you cross all your T's, dot all your I's, and get all the paperwork in that's necessary so that something doesn't go wrong in this process. Can't say it too many times. Again, it's helpful to have somebody that knows what they're doing there to help you through the process. One of the things, for instance, is that they want you to match invoices with receipts. So you got to make sure that every invoice that you send out for, a drywall specialist or general contractor has a check that matches up with that to show that everything equals out in an accounting sort of way. But all that works out and you receive your credits. And just a side note, if you're not quite sure how tax credits work, or even really what they are, check out our YouTube channel, because we have a tutorial on there that's just about tax credits in general and kind of give you a good understanding of what they are and how they work and how they're applied by individuals once received. But one of the things to understand about the historic preservation tax credit is that the tax credits will be allocated to the owners of the project based on their percentage ownership in the project. So you're converting an old historic building into apartments and you're 50% owner of the project, you will get 50% of the historic tax credits that are awarded at the end of that project. And these tax credits cannot be sold. There are ways you can get into partnerships or syndications with financial companies or investors where the credits can flow through. We'll go over that in a future tutorial, but for now just understand that in most cases the these federal credits are going to pass through to the individual owners based on their percentage ownership, and they can't be sold. They're just things that you're going to use personally to help pay your federal taxes. So on the other hand, there are some states that actually have their own tax credit program above and beyond or on top of this federal program, where they will offer state tax credits and along the same guidelines. And there's many states that let you sell those tax credits for cash. And if that's the situation in your state, then you may be able to get state tax credits, sell those for cash, which is obviously a great thing because you can infuse more capital into your project. Again, get with an expert, get with a consultant that can tell you what your state requires or offers in terms of tax credits, how those might be used to help your project. And then just one final thought, real estate transactions, development projects are complicated, and the best thing you can do to help secure the success or ensure the success of a project is to do your due diligence and a lot of planning up front. Find somebody that can do a project analysis for you, somebody that can do a financial pro forma, somebody that can basically build a roadmap and say, here's what we've got to do, here's the government programs that we may be able to use to help us out financially, here's how the pieces will come into play, here's how the money will flow, and here's what we can expect at the end in terms of our return on our investments. Not just for yourself so that you know what you're going to have to go through and you've got a map already in hand, but also as something that you can show to potential investors or banks to show them that you know what you're doing and that this is a solid project. So if you want to learn more information about historic preservation tax credits or other tax credit programs that are available out there, please feel free to visit jvansickleandcompany.com. And if you found this tutorial useful, then please subscribe to our YouTube channel. Thank you.